The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As always, we love to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
So we're off 21 on the S&P cash. Looks like we're going to go try to test the low of the day, which is 2742 on the S&P cash. Dow's off, well, let's update these just to make sure. Dow's off 180, and NASDAQ's off 73. Russell's off 8. And we just have a market that forever buying the dips made sense. Over the last, I'm going to say, week, that turned into a diminishing return kind of way of making money. And that was telling you that why the buying and selling was closely matched. There still was a preponderance of sellers. As we said, there's so many of these stocks have gone up from those December 24th and 26th lows on light volume that we were bound for a fairly decent retracement. As we've been keeping an eye on, the options continue to show significant weakness. Now, as we said yesterday, one of the things you really look for in options is when the option market makers go delta neutral the Wednesday before expiration. So you have 7 days after, 7 trading days before the options expire if they are not exorcised. So what do we have in this? Well, we've got the March 15th date coming up. The SPYs actually had been down as low as 220 before there was any significant people willing to step in. We did see at least some downside come in yesterday. We'll see if more of it comes in today. You want to watch these tracks in. These aren't exactly what's going to happen. The best way I've described this is if the odds in a football game get way out, you may have to pay more or less points on the spread as you get closer to the game. And that's kind of what happens. As people do things, you will force changes to make sure that all these options remain delta neutral for the big option market makers. The people who want to take big risks, that's another issue. But you don't find that on Wall Street. At least you don't find that for long because those guys aren't around anywhere when the ball doesn't bounce their way. But what we do have is the SPYs showing weakness all the way down to 269. I'm going to say that again, 269. Does it get all the way there? We could track back in, but I think you could easily say that we've got, some significant downside in the market all the way through expiration. That we bounced today, and the volume once again came in incredibly light for the bounce. In fact, as we start to show today, almost all the volume happened before 11. We got about 4.6 billion shares, though. So that at least means that today's low at 2742 is going to be retested probably within the next few days before you're going to get one. It is not uncommon for the market to go lower when it does, which is about 1 out of 5 times during options expiration from delta neutral day into expiration day. But it tends to be vastly accelerated or accentuated because so many people tend to be on the wrong side of the market when it does happen, because it doesn't happen often. you get a much more asymmetrical move in the market. Now, at the same time, my work on the sector oscillators below a certain range, significant, I can't even say it, says that there is a, not significant, there's a magnitude, order of magnitude higher rate, not higher rate, higher probability of a greater than 3 standard deviation in the market to the downside. Same thing happens in the upside. So if we're going to get big swings, as of last night, we are 3 times more likely to get some kind of massive greater than 3 standard deviation move. Generally, that also coincides with the washout in the market. So I'm looking for some kind of, we are short in both newsletters. And we're looking, at least in the daily, for some level to pick up some of the pieces we have. One of them is kind of a longer term short, so I don't know if there's going to be a lot of action in it in the short term. But at least we've got one position doing very well in the daily and in the longer term tech insider too. But we'll have to see how that plays out. But it's not uncommon to see the push all the way into Wednesday next week or even Thursday, and then see the correction for the downside come into those Fridays. And that's where buying calls on Friday morning, if the market continues to turn lower for the rest of the week, especially if we get some kind of washout, could be interesting. Still haven't found any lows in the gold sector oscillators, but you know, we could actually be seeing some kind of signal in the next day or two if the trend continues in gold. So there may actually be it. It's not uncommon to see gold sell off into a market sell off. And normally, or I'm going to say generally, when I listen to Jim Sinclair, what has it been? Almost 20 years ago now, 18 years ago, that it's not uncommon to see gold sell off with the market for the first couple of weeks of a extended sell off until gold starts, people start going, well, you know what? We actually need gold. But the reason why that he stated was that many of the big men of Wall Street loved to buy gold as the market went up, whether or not gold was going higher or lower, as a end of the world catastrophe kind of bet. You'd always have the gold. But as soon as the market starts coming down, they take that gold off as they take off their positions, and therefore gold kind of pulls back a little bit when everybody thinks that it should go up in a market that's starting to get a little iffy. But that can go for about 2 weeks, and then generally you find some kind of low. Now, we've been kind of moving down already for a little bit, and the gold miners of gold. But we might find something next week, maybe at the same time we find a bottom, or at least a short-term bottom in the general broad markets. We'll be back in a minute.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
And I had a quick question, and we'll go on to history here. And this is mechanically what was done with the SPY calls to last few days. And basically, they will continue to sell and buy puts and calls to get the curve that they want, the risk profile that they want. Sometimes in options, you'll hear people call it the option smile. And that's basically what it is. It's kind of a big bowl, and at the bottom, they make the most amount of money. As it goes out on one side or the other, they make less. To the point where actually they start losing a lot. There's kind of a standard risk reward, but the idea is, especially in the kind of market that we've had over the last couple of days, is they'll continue to sell options that they don't think will ever get hit. And that actually brings up the price that they have, because those options will go unexercised. And, you know, it's not uncommon to see them really push the market down, like I said, and then get in the last day or two and see all those options that are basically worthless, try to buy them all back at a dime and 15 cents as people try to get washed out, and then bring the market back up on the last day. Always a way for them to make some money, but it's just selling and buying and taking. Maybe you have a bunch of options that you've had out. Well, you buy them back, and that takes off your risk, right? So whether you had puts or calls, you may change the amount of puts and calls that you have, maybe buying both back to reduce your risk, but it may actually be more buying back more puts than calls. And that brings the number at which you make the most amount of money as an option market maker, changes that number. We've got a little history, and then we'll move on.
And it's all just a little bit of history repeating.
On this day in 1876, Alexander Graham Bell receives a patent for an improvement in telegraphy, which will later become known as the variable resistance telephone. A great deal of people have said that maybe he didn't invent it. Kind of like Mr. General Electric didn't invent the light bulb. He invented the first light bulb that would last more than an hour. This is kind of the same thing. There were a bunch of people involved in trying to make things that were telephones. But back in this period, until 1910, you could get what was kind of a half patent application. And of course, people misused it as they did in the telephone, where they kind of did some broad outlines. But a patent has to tell you exactly how to build something so that it would work. These things were called caveat patents. And there was a handful of people, I think a lot of sour grapes, but there were a handful of people. One guy named, it's like Mnuchin, but it's Minucci, I think, Antonio. He had this really goofy idea of using water, almost a hydraulic version of a speaker instead of using electricity. His actually floated in a lead acid battery, and the more that the float went inside the battery, the more power would come out, and the less, when it would float higher, the less would come out. It would actually make a sound that you could almost understand. What Alexander Graham Bell did was really come up with a way that may not have been loud in those days. They didn't have amplifiers, but it was intelligible. And until that point, no one really made something that you could talk both ways and understand what the other person said on the other side. Of course, the amplifier was the next big invention in this space. And at the same time, Mr. General Electric also made a lot of money because they had already patented kind of the earphone and microphone parts of what this was. But overall, he had the kind of what they call an application patent now. Actually, what does it do? And if you wanted to talk back and forth on the phone all at the same time, that was a telephone on this day in 1876. So what do we have out here? We're going to take a quick look what happened during the break. We're about 8 points higher than the S&P cash. Certainly looks to me like we're going to go retest those lows. Then we're going to go into Friday. And what happens on Friday? Well, if you got a whole trend where everything's looking horrible, a lot of people willing to toss their hands in rather than sit on a position that continues to lose money over the weekend. But would not be surprised to see, as I said, in the next few days, a huge gap down or a huge slide down as almost everything's in the lower quadrant of my sector oscillators. In fact, we'll probably show one of those later. But they're in the newsletter every day. We're looking for some kind of washout to signal a bottom, and that may take the rest of next week to get in. Nothing out there says, other than retail, that much is going on in this market. What else do we have? Okay, that's it. Anyway, we did our, did I play the history thing? I'll play it again.
And it's all just a little bit of history repeating.
Well, history doesn't actually repeat, but it does rhyme very closely. So let's go ahead and start looking at some charts today. You can give me a call at 877-927-6648. Oh, forgot one thing. Mr. Basil asked me to bring up why ETFs don't track. Somebody either called in or wrote him an email, and I'm not exactly sure if it was on the VIX or related to it. But there are a couple of things in ETFs that you need to know, and that is that leveraged ETFs, mostly what everybody's talking about when they don't track, have really three different problems. One is that they're based on futures, and futures can have both contango and backwardation. Contango refers to a situation where the spot future price is below the current price. Backwardation relates to the price of the futures contract and the time to expire. But as the contract expires, futures contract trades at a higher price to when the contract was further away from expiration. So kind of a contraction and an expansion. Now you have to put that together with the ETF and the VIX, that actually is two different oscillator periods. And so how the market reacted in the past can actually vastly influence the way that the VIX responds today. And it seems rather silly when the market goes down that the VIX doesn't automatically rally. Well, between all three of those, the contango backwardation and the oscillator movement, you have to basically understand all three of those to understand why the VIX moves and when it will move more than it should, when it will move less, or even against you. Email me at path@tfnn.com. There's a white paper that you need to read if you trade the VIX.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're hanging out. Again, not a lot of volume down, but even less volume up, pretty much. And, well, we had a bunch of other things kind of turn around. Now, one of the things is what I call White's corollary, and that is that the most amount of people will be bearish at the absolute lows. And as I look at the put-call ratios, especially in the VIX, they did not go up much yesterday. So I'm expecting, until I see some kind of spike where everybody's buying puts, that we haven't found any kind of low through expiration. Volume about 4.8 billion shares with an hour and a half left to go. So again, we're going to have a lower low, broke through those lows, and we're going to have most likely significantly higher volume than the last two times we broke through lower lows off. What it was about 28.11 on the S&P cash. So we'll keep an eye on it. First thing I want to look at Microsoft. We are starting to see at least a little bit of weakness. The big problem I've had with all these big names has been the incredibly light energy off that December 26th low. When we look at my power law vector indicator, off the high of December 3rd on Microsoft down to that December 26th low at a 16 on the way up, I had 10. These things are semi-logarithmic, but you can say that energy's off by a good third or 30% or more, 33%, all the way back up to these highs. And it doesn't take a brain surgeon to see it. All you got to do is look at the volume bars down below, everything from that December 26th. It certainly looks like it went up. Not a lot of people were that interested. Maybe people a little bit too short, a little too early on this market. But certainly there wasn't the energy that we had. Anything on the way down or previously on the way up that we had all last year. It is a light volume move back up to test recent highs or all-time highs in so many stocks. Let's take a quick look at some of the other big names in FLX. Netflix, you got back up to 371. You've been going sideways for a week, which is a lot of these are setting up this way. Certainly looks to me like you could be in some level of distribution in Netflix, but you don't have a signal of a failure yet. When we look at Apple, I was looking at the options on it. It certainly looks like Apple closes at 170 or below, maybe 167.50 by next Friday. Certainly looks like it has a high in. You also have the opportunity to come back, and especially if you're want to be long Apple, you want it to come back and test about the 162, 163 area, all the way down to 157. And if it did that on light volume, you might have some nicer trading range actually setting up with Apple. I'm not really bullish on Apple, mostly because they're not going to have a 5G phone in 2020 or in 2019. It's going to be after the first quarter 2020, according to them. And that leaves several others to get into that business before Apple can respond. Now, maybe Apple's sandbagging. They've done it before, but problematic. Let's go ahead and look at Amazon real quick. Amazon and Google and some others are facing significant taxes in Europe. We're going to see those in a few months in France now. In 2020, we get them in the UK, whether there's Brexit or not. You do have a kind of a move down here in Amazon, and just kind of a weak, certainly weak, one of the weaker moves off by, again, 30% off this February 8th low. It's come back up and it's rolled over. The volume's not all that exciting yet, but it just looks to me like this entire market could ratchet back down at least 50% of that December 24th low, if not more. Right now, I'm only planning on a 50% retrace. If the volume remains light, that may be the next move higher, but we'll have to keep an eye on it. What else do we have? Someone wanted me to look at IBM. I've just thought IBM has been dead money for a while. I mean, you did get a bounce out of it, but I think it's just an overshorted bounce. You didn't get that horrible numbers on earnings on the 23rd of January. It caught a lot of people on the wrong side. I think that a lot of people that were short this thing are starting to get off of it. And that's generally when you see the gaps back down on weak stocks. Let's take a quick look at the short positions in IBM now. Very light, under 10% almost every day. You just had the volume drop, which is the biggest problem. Average volume almost dropped in half from the beginning of the year. And you've got almost 4 days to cover on it. So, I think what you really need to do is see the shorts back away from this or volume pick up. But right now it's too thin of a market and there's too many shorts in it. But yeah, you've got, what is that, 13 million? Yeah, almost 14 million shares short. So rather large. Okay, what else do we have? AMD, we'll take a quick look at. I said this one looked like it could come back fairly quickly. It's not coming back on a lot of volume. It did gap higher on the 30th with 211 million shares. Back into it today with 41 million shares. Still could get back into about $20.75. And actually, if the volume remains light, that may be a buy there. Certainly, I don't think I'd be short it right now. Micron has taken the biggest beating. As we talked about it last few days, there was a lot of discussion and has been a lot of discussion about the oversupply of memory already for both AMD and NVIDIA for the video cards. That's maybe the most profitable memory that they make at all in entirety on a percentage basis. You've got a little bit farther mover down here. But again, this thing kind of looks like it's going into about 35 bucks, and we'll see whether volume remains light. You had more volume certainly yesterday. You had a little bit more short interest in it also. Give me a call at 877-927-6648. Email me at path@tfnn.com. And of course, you can always post a message in the den. Got a couple of emails. Looking to short EA. That's from Paul in Boca Raton, Florida. Just going sideways. Wow. Yeah, it's got to be, and this is a hard one. It's not distribution at the top, and it's not accumulation at the bottom. We'll be back in a minute.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get the competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we're back. Anyway, we had looking at EA. And what I will tell you is it had a very light short interest in it, which is only on the previous reporting period was only 2%. We've gone to 4%. But you did go from about 7 million, a little less than 7 million shares short to almost 12 million shares short in the last reporting period. So you got a lot of people that are kind of getting on that bandwagon. I do kind of like this, but man, I would have liked this if it would have held up at the highs and had no volume. This thing's right in the dead center. I think if you're buying options, I think probably a better play. I haven't looked at them to see how much they are. But on a daily basis, you got a little bit of short interest in this. 14% yesterday, day before that, 13%, 14. So it's not like everybody's piling on, but they are adding to those short positions. And I suspect that if we have one decent day higher, that you're going to see this thing go back over 100. And I think that's where you'd want to pull the trigger on it. I just wish there was a better pattern out here. It's not that this pattern hadn't failed before. It's just a little ambiguous. There's some that seem to be a lot better looking than that. But yeah, I could understand why you would go after EA. It seems like there hasn't been a lot of good news lately. Other folks out here looking at the Pizza the Hut, which Domino's Pizza. And I have short Domino's on an option expiring March 15th. What do you think? You think it'll get down to 240? Well, certainly, I'm going to say yes. Yeah, I think that there's probably an 85-90% chance that you hit 240. And I haven't looked at options on this, but looks pretty good. I mean, if we don't or can't bounce today before the close out here, I'm suggesting that that 3 standard deviation greater than 3 standard deviations will probably be tomorrow. Maybe it's a gap down. Maybe it's a big selling day. But my guess is now that before we saw any kind of significant pop, we could be down to 2,700 on the S&P cash. So, yeah, I don't see any reason to cover my short positions. I've got a couple that aren't cooperating with me, but these things are kind of nuclear bombs. When they crack, I think they're just going to crack and move down 4 or 5%. And I've got puts on them that are fairly inexpensive, and I'll why I have to kind of sit here on the wrong side for a little bit. We're talking about them being about 1.5% price-wise from going into the money, and then maybe making 400 or 500%. So I know why they were cheap, and I know that a lot of people are going to be going to want to bail on them. And the question is, when does the music stop? And what is that? What was that game where the record would stop? I can't even remember it now, but I remember it was a game that I played. Someone in the den. Was it music? What? Something? You had the chairs. Keep pulling out the chairs. Yeah, someone will say. No, I don't think there's going to be any bounce. Somebody is asking. Anyway, Domino's Pizza, yes. I think you got an easy 240 out of this. I would probably, looking at what you're set up here, I'd probably take my money as it crossed 240. Although there may be more in it if the market conditions continue to deteriorate, which is a word. What else do we have? So we got Domino's. Got a question from Joe about LABD. And what else do we have? Musical chairs. That's what it's called. I don't know. I'm just having senior moments all the time these days. Okay, you got a little bounce in this. How does that look? The XBI has made this. Hang on a second. I want to actually bring up my morning newsletter and look again. I think that's it. Okay. Okay. Hang on a second. I'm just going to find it. There it is, the IBB. If I can get this thing to move. Okay. Yeah, I mean, it's cracked. I think you got at least 4 or 5 more, maybe even 6 days, trading days, that you have it. You got the confirmation yesterday. It's moved down. It's broken the move, and you probably have a move back into 106, at least on the IBB. I do it because it's got more stocks in it than the LABD. But yeah, I mean, all these stocks are now, as I said before, are now, in fact, let's look at some of these other ones, are now breaking below this bar that I put in here. It's kind of a gray bar if you're looking on Tiger TV or in the den. Once you start getting underneath those bars and above those bars, you start seeing a rapid acceleration of volatility, especially in the individual stocks. You may not get that, 3 standard deviation out of the ETF itself, but in the weakest and strongest stocks, that's where you start seeing these things fall out of bed. So, when you're short, of course, you want to short the weak stocks. Long, you want to be strong. You're going to find those stocks actually run the hardest up at the highs, and of course, get sold the worst on the lows. But everything from the financials, just about everything confirmed yesterday and went under those bars. I want to thank Basil for pointing that out to me when we were first developing this over a year ago. But we've got starting to get some stick time, as they used to say, underneath it. But until I get some kind of washout, like we saw back here in the 24th of December, I don't think that there's any reason to be covering any shorts. We are certainly down in those lower levels. Let's see. Yeah, I think you're fine. You may not get the huge moves you think you are going to get off this in the next couple of days, but maybe by next week, you'll start seeing the rest of these sectors a little bit better. But you know what? On a percentage basis, I don't know what you're in this at, but you could get into $26 to $27, I think, on LABD. So that should be a good thing. Yes, musical chairs. And the music stops. I just couldn't remember. Be back in a minute.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Well, on the S&P cash, we certainly made a new day low, and so did the ES and the futures. I don't think we get some kind of radical bounce before the end of the day. Maybe we bounce off this a little, but I'm seeing far too many other stocks, some that have come way down, that tried to bounce today and never got much traction. They may not be lower, but I mean, they're already off 30% off their highs, recent highs of just a few months ago. So some of the more bubble-issues stocks still can't get any traction. If I would have seen some short squeezes in things like Tesla and other bubble-issues stocks, I would have thought maybe there was something going to happen. But now you got two choices: either take probably the money at the close and or wait for the open. Again, I'm not thinking that we make any kind of significant low from everything I'm looking at, unless there's some kind of Fed announcement, which you never know about. But I don't think that we find any kind of low before next Wednesday, and maybe even next Friday next week. Everything is just now kind of turned into the real downside of the market. And, of course, options continue to show lower prices. So until I start seeing people change that much, doesn't really matter. I would love to see some kind of big 50-point route on the downside to wash out the S&P We're down 30 now, which is pretty good. But I'm thinking somewhere in the neighborhood of 50 points is what it's going to take to set up some kind of tradable low into options expiration next week. As we said, volume has been light on the pops. It's not been excessive on the downside, but the upside, very light. And again, diminishing returns for all those people that have been buying the dip for forever. Anyway, that's about it. We'll see you tomorrow. Same bat channel, same bat time. And as always, you sell when you can, not when you have to.